what we are going to show our MMTs here is we're going to walk around the world. We're going to take a look at the EEM iShares, okay? It's emerging markets now. And when emerging markets were putting in their lows here, we started to break higher here 1, 2, 3, 4, 5 days up, just like the Dow and U.S. markets. U.S. markets led it. We were oversold. We're going to go through some of the other diversification models that we use here. And we could see where the world was acting in this 5-day period all at one time. You can see where the tops were in this emerging markets had come down, but they also too, the emerging market ETF around, and we use these to know where the rest of the world is. We were making lows right along with the Dow and the S&P and NASDAQ 100. Then we started to break higher. We're going to find out, because there are a lot of different trading instruments, as we have shown in other examples here today on July 3rd of 2011 with MMTs, as far as using bears and bulls and indexes and where things are going to go. We will be monitoring this very carefully. It is part of your apprenticeship yearly training, is to understand where emerging markets are. Some of the ones that we're going to take a look at, we'll take a look at where Germany, Hong Kong, Italy, Japan, Switzerland. One of the other ones is Spain, Singapore, Australia, Brazil's a hot market. There's lots of markets, lots of different currencies. Euro Trust versus Euro SS, you know, that's that FXE now. And we can see where the Mideast Africa is going to be. We can see where lots of them are going to be. So as far as the emerging markets, the next one that we're going to do is we're going to go through them. We're going to go through what's important about this EWH. That's the Hong Kong market, the Italy market, where, you know, the EWI, the EWJ is going to be Japan, and Switzerland is EWL, and Malaysia is going to be EWM, and Australia is going to be EWO, and Spain is going to be EWP. France is EWQ, Singapore is EWS. Not to mention that the EWZ, the Brazilian market. And once again, the reason why we want to look at some of these is that China 25, that's that FXI, that's this one right here. And they made all-time lows. And the FXI China 25, but you can see it's rallying on up. When it broke below, when this thing gapped down and broke that 200-day simple moving average, we put in a knife hook bottom, and here you can see where it took that out. You can also see where that 5-day, 3-day consolidation within its 5 days on here. But we're going to be looking at these key ones. Here's another warm-up. Australian markets, how they had hit their bottoms, where their top reversals were, how they too have had 1, 2, 3, 4, 5 days, and the rest of the world has gone the same way in this whole 5-day period. We understand that the MSIC, this is at CDA, EWC here. This is CDA here, but you can see how they put their bottoms in right here, and we come up to this resistance level in these 5 days. Not only that, when you take a look at the Hong Kong market, Hong Kong was sold down. Theirs was the top of the reversals, right along with our markets in the U.S. Was a huge move down. We took out that resistance level right there. This was that shorter term breakout, but 1, 2, 3, 4, and 5 days, it seems like the rest of the world. Hong Kong market, Hong Kong EWH shares. Now, as far as Italy goes, on the other hand, Italy finally put a bottom in there. This was a way big top up here. Okay, and this top was happening on 429. When I said there was going to be a big correction in emerging markets and around the world, they all went tumbling down, but then they've all rallied 5 days together in the same way right up here. So you can see here exactly where we took out some of these support and resistance levels and whatnot. There's going to be some gaps. This is the crown part of this Italy. A lot of it had to do with Greece and a lot of other pans. Switzerland, let's take a look at it again. Switzerland only had 5 up days as well, had their tops put in. So it's good to know where we are around the world and how we're going to get in to trading some of these. Look at the Singapore. Singapore bounced really nicely too as well. They too had gotten overbought and overheated and started having their corrections accordingly. Down here is where the rally started for them. It started here at the bottoms, just like all the indexes here in the U.S. They all have a very similar pattern, and that they were short-term oversold and they were due for these bounces. We'll be monitoring this Taiwan market. Taiwan is a very important market. It too had put its bottom in. It too had its tops. These markets had their pullbacks around the world, and there's different instruments to trade that you're going to learn that make money. And the thing about it is how do I diversify risk? Here is a good one to take a look at. It's a spider index, SHS, FDS, S&P, emerging EMKTSE, emerging market. But look at this thing. This is a great one, and you should write the symbol down, EWX. And we've come all the way back up to the 200-day moving average. We put that top in there, but you got to know how these things were related to the correlation of all markets and how markets put in bottoms. This one here looks just like the S&P 500, the Dow, and the NASDAQ comp, and bam, 1, 2, 3, 4, 5. The world's on the same way. So everything was short-term oversold. Everything was worried about growth patterns worldwide being jeopardized and whatnot, and what's going on with Greece, and you still got Spain, Portugal, Ireland to worry about, and all of these things are forward-looking. But the main thing that I want MMTs to know is that all of these breakouts are tradable. And let's take a look at Korea here. Korea had a good move. Look at that, right back up there. Here's the top on them. This is where you have that gap down top right here. See, and we never have looked back, but we had short-term bounces, but everything put bottoms and the world has rallied all together. One of the things that we'll take a look at here is the euro. You can see here that the FEZ Spider SHS, it's a Euro Stocks 50 bar. What it is that when things had started to change quickly around the world with all the great resolves that we were going to have, is we had put a bottom over here in this. And we rallied up 5 straight days in this, and it was a very great directional move to take. I'm going to do some individual ones. This is just to let you know that the EFA, which is the EAFE index, it too had put its bottoms in and has rallied up. Look at that, 1, 2, 3, 4, 5 days. These are the things that had made the tops and it went down. There were short-term bounces. They took out their resistance levels. You can see where the failures were right in here. These are the things that we have been covering. Now, with our yearly apprenticeship people, part of what they need to do is be diversified around the world, and they know that, but they need to know, which instruments are going to move the most and how things can move in tandem, how they all have similarities. So basically I'm going to do some of these on the individual ones, the ones that we like. Here is a one that we like, that is let's take a look at this real quick. This here, I put in its double bottoms right here. This is called the MSCI ACWIEX. It's a spider index. It's a CWI is the symbol. What I would like to say, and I will go through these individually with MMTs as to what they mean, but it's the ones that we always cover. We like to know what's going on around the world. We like to know when there's growth contraction. Then we like to know that everybody believes around the world, as the 5-day rally happened at the end of the quarter around the world, is that everybody has a belief that growth is going to go higher. Look at 1.8% to 2.5% GDP growth. Just doesn't cut it for me. I can tell you that these things are going to stay in trading ranges and the volatility, but one of the things that we're going to be monitoring around the world now is some key markets that have made some extreme lower lows. It's that sell-off to the bottoms here. It's the depth of this line right here, okay? And on the way up, if we go up and we start filling in some of these key areas, particularly on this one, it's a CWI Spider Index, okay? And we're going to watch where these failures are, because these were great breakout plays on daily plays. They went 5 days up. They got past the third level on all of them. So I'm going to conclude the trip around the worldwide indexes and get into key Pacific ones now that we need to be aware of, and how that they have all moved in tandem in price action. And then the most important thing is, how do you go around the world to diversify risk, long and short, using the U.S. as well as part of your trade management. It's very, 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 very in-depth training. But once again, when the world is breaking down, you're short, and when the world wants to go higher, you're going higher.